What's going on, guys? Welcome back to another inter-equity trading video. Today is gonna be a money one. We're gonna be talking everything and anything to do about liquidity. Everything I have learned over the course of years and thousands of hours of looking at these charts. So please sit back, grab that notepad and take as much notes as possible because I'm gonna be pouring my brain into you guys, all right? So leave a like, a comment down below of future videos you want to see from us. Turn those noties on. Enjoy this one. All right, guys, we're going to be talking about NQ, and I'm going to be showing you guys the power, the true power of liquidity, only even using the higher time frames, not even hopping into the lower. We're going to be on the daily time frame right now, and we're going to break down all of the price action in front of us right now, and also we're going to unfold more as we move on. Let's talk about this big sell-off we've had. We can actually even hop onto the weekly here. The market kind of topped out here and printed a top, you could call it, right? And you can even see we have equal highs. So I'm going to mark on this high right here, and I hope we can all agree why. We have a reason to mark on this high, right? I'm not just plotting on a random high. Look how we have this high respecting this high to the left-hand side. That is price communicating to us, telling us we have left liquidity at the high. So look at this. I plotted it on, not because I'm predicting it, because the market has literally communicated it to us. And remember, this is the weekly time frame. So check this out. For 1, 2, 3, 4, 5, 6, 7 weeks, we had a rapid sell-off to the downside. Think about the mentality, the mindset of the retail trader seeing this kind of move to the downside. It's going to entice them. It's going to induce them to continue selling, whether that's going to be continuations, whatever way they trade, they want to be selling this market back down. Now, we have to view it from the perspective of why did this move occur? If you look to the left-hand side, we can all agree that we have all of these lows built up in the market for us. And if you continue following them, check this out. This wick right here tapped into something on the left-hand side. Now, this low tapped into something on the left-hand side. So this is like, you can call it like a chain, whatever it is. This is all liquidity here. And look, if I mark this red box on, you can see that we have tapped into this area as well. The market was building liquidity for weeks, months, all right? And then finally, big sell-off to the downside. What was the purpose of it? What was the intention behind it? To clear all of this liquidity. Okay, if I draw this line on, it'll make even more sense. And now check this out. What do we have right below? Hope you guys all see this by now, a liquidity block. So we can plot on a blue box. Look how the market taps into this area. And that is where that bottom in the market is found. We trap all of the buyers above this low, tap into an LB at the extreme, and look at that reaction coming out of it. 1 week, 2 week, and then finally this third week. Look at this bullish closure. Right away, guys, I hope you guys are starting to see more and more of this, but your eyes should be back to these highs. Okay, that is the only logical liquidity point I can see in front of us right now. These equal highs set for us. Okay, and remember, the intention behind this move from high to low was to induce sellers to the downside. We need to be buying back up. Remember what I always say, if this trap move to the downside occurs, any bearish moves, deem them to be false, use them to find a buy opportunity back up to the upside. So this is the weekly time frame. We're not going to be taking entries off the weekly, so let's hop into the 1 hour and the 4 hour, and we'll start breaking down a bunch of entries on the way back up. Okay, so ever since we tapped into this higher time frame liquidity block, which is going to be the blue box, we can just drag this over to clean it up. We reacted, we get a pullback to the extreme, and then boom, we find momentum, and that continuation starts coming in. From there, we get another little pullback, we tap into some imbalances and continue to the upside. Now, if I mark out this area that we've tapped into once, look at this, right? And I mark the whole high, drag it over. Remember what we talk about all the time about where liquidity is. We're not predicting, we're letting the market communicate it to us. So look at this, this high respects this whole area here, telling us that we now have liquidity above this high. So that's a great confluence. Use that to your advantage. And if I play price forward a little bit, okay, look what we have done. All right, I hope everyone's starting to see this, but we have built a shit ton of liquidity. Look at this, guys. This is the 4 hour time frame. Can you imagine how many people are getting screwed over in this type of price action, range, respecting lows, respecting highs, still trading in this whole area, this whole trap area. This is good though. From our perspective, with our system, we want to see this occur. We want to see this build up in the market. We now view this low to hold liquidity, right? And if I open it up on the 1 hour, you can see why. Again, we're not predicting, it's literally communicating it to us. We have this low, respecting this low, and going long back up to the upside. Okay, so that's why I have plotted on this blue line right here. Perfect. Now, if you look over to the left as well, you can see all of this has been tapped into. So this is all liquidity as well. You could even mark on this. And coincidence, right below, we have a liquidity block. We don't have a reason to run this low. Why would we run the low? We just took out a level of liquidity here, and then we went bullish. Okay, so I don't view any liquidity to be below this low. We have liquidity to the upside. We have a reason for us to push higher. We have a buildup of buyers, okay, and we have a liquidity block below. Perfect. Everything checks the boxes. We need to be taking an entry once the liquidity is taken. So boom, entry, stop loss, and don't forget about our targets, guys. These equal highs left for us, done on purpose, will be all the way back at the extreme, okay, all the way back at the highs. Now let's hop into the 4 hour, and we'll start unfolding price. So look at that. Rapid sell-off to the downside, inducing sellers, but not only inducing sellers, trapping buyers. Okay, once those buyers are trapped, again, that's when we are interested in buying this asset back up to the upside. Okay, we'll clean up a couple lines here, but that is gonna be entry number 1. And the easiest way to manage this, very easy, very simple, is as soon as we take out this high, we can all agree that liquidity has been taken. So manage your risk. Maybe it's roll it to break even or just tuck it below this low. Nonetheless, when these highs are taken out, you need to be managing your position. Let's play this out a little bit. And just like that, we run those highs. So now we can BE this 100%. We can all agree on that. All right, let's remove this line as well. Okay, and we're gonna go back to the hourly time frame here. Perfect. Okay, so now our entry number 1, it's played out pretty nice. We've taken out a high from the left-hand side. Since we have taken out that high, remember, we gotta be BEing this. You can't just be holding it full volume and not be break even. So BE here. I think we can all agree what's happening in front of our eyes again. Let me drag this red box over. Another buildup of liquidity. So let's follow along. Buyers induced after taking out this high, buyers trapped. This is where a lot of people make mistakes. Just because we have taken out this low here does not mean we need to buy right away. That is pattern trading. We do not do that. Look what the market does. We print this low and we go long. Remember, sellers are induced, right? Sellers are selling these areas. Look what the market does for us. It reacts off it to build liquidity. So there's liquidity above this high now. This is not an area we want to be selling from because we have taken out this low. That's something you need to identify. Just because there's a reaction does not mean we need to be involved in it. And we start getting a reaction back down to the downside. Right away, look where your eyes need to go. Back down to this low. Why? We have liquidity here. Same thing, look, high taken out. Low, respecting low. That means price has literally told us, it's confirmed to us that we have liquidity below this low. Wait for price to come below this low, and would you look at that? We have another liquidity block at the low down here. If I drag this over, the only issue with this liquidity block, guys, is look how big it is. We would have to enter here, and our stop loss would have to cover the whole low. Now, we're on the hourly time frame. Check this out. We have another liquidity block, a refined area right here. Okay, and this is only using the 1 hour time frame. Okay, but you can see how price takes out this high, takes out this low, leaving a liquidity block down here. So we can use that as a level to put our stop loss. So that shrinks our SL quite a bit. Look at this. And this is all doing this on the higher time frames, by the way. Of course, your RR can be much higher if you use the lower time frames to refine after, but that's not the purpose of this video. So entry here, same target, back up to the upside, just like this. So let's see what happens here. So remember, we induce buyers. We want to see price below the low again. And boom, we get tagged in and price starts continuing to the upside. All right, rinse and repeat. Okay, so now this entry moves up to the upside. Remember, we've taken out this low, inducing sellers. So any reactions at the highs, deem them to be false. Now, I skipped a little bit far ahead, but maybe you guys can test on your own here and see what I see. But look, induce buyers, we trap them. Look at the engineered liquidity we have at the highs. Okay, I hope you guys are starting to see this on your own now. And what do we have right below? Go to the 15 minute to kind of open this up a little more for you guys. We have another liquidity block right here. Price takes out this high, and then price takes out this low, boom, LB. So we can take our entry as soon as price stabs out this low. Anywhere below this black line I have marked on is a valid buy. Why? LB below. So that provides us a level to put our stop loss, just like this. So let's clean up a couple of these lines. Entry would be like this. And as soon as price takes out these highs, roll your stop loss. Boom, just like that. And targets, everything remains the same. Don't forget about that higher time frame narrative. Let's drag this target all the way back up to the highs, just like this. Remember, every single bearish reaction is only going to provide us another opportunity to buy this asset back up. Now let's play this out a little bit and see if we can find any more entries. All right, so the market actually ends up gapping and moving even higher. Look at this so far. One entry being here, and I hope you guys can see the pattern as well. Look at this. Every single entry, once liquidity is taken. Once liquidity is taken. Once liquidity is taken. It's the same thing over and over and over. Now, we need to identify another level of liquidity in order for us to buy back up. Let's break down this price action right here. Nothing really to take yet. However, things to point out for sure. We induce buyers. At the least, you want to see price below this low now. At the least, because since we have induced buyers, people want to be buying above this low. Therefore, we want to see price below the low. And we take the low out. Let's hop into the 15-minute time frame. So we take the low out, we're going to hop into the hourly right now. And it looks like since we have taken out highs here, same thing occurs. We are inducing buyers. We need to see price back down at the lows. Remember, we're not going to be buying once highs are taken out. Okay? And price ends up selling off. Now, I almost want to pause the video and show you guys, actually hope you guys can identify what has just happened. We have induced buyers. I'm going to get my paint tool out, inducing them. And look at this sell move back down to the downside. We trap this low, but not only this low. Look to the left-hand side. This is where people make a lot of mistakes. We have a liquidity block left for us, which means in any reaction in this area can provide us a buy. And check this out. If I use this blue box, drag it over, look at this. We have tapped into this liquidity block perfectly. Remember the logic. This is the accuracy. It's crazy sometimes, the precision on this, but the logic of this is there's no liquidity below this low. Therefore, why would we run this low? So we use that to your advantage. We tap into these areas, take entries off them. Boom. Entry would be just like this. Stop loss would be below the low. You have intraday targets here, but again, don't forget about that higher time frame narrative. We are going to be targeting the highs back up to the upside just like this. So you get tagged in perfectly at that LB. Again, great intraday targets on the way back up. Let's play this out. And you get a gorgeous reaction higher. Perfect stuff. Let's hop back into the hourly and we can make sense of what's going on. So price takes out these highs and now we start getting a pullback. Remember, the first step, we need to see a buildup of liquidity. We need to see buyers induced. Okay, now look to the left-hand side. The same thing over and over. High taken out, buyers are induced. Look how this low respects this low. Building liquidity here. All we got to do is plot on a blue line. That is a form of liquidity for us. Now here's the buildup. Price approaches this level. Okay, this whole, we can mark it on as a red box just to make it easy for you guys. So price approaches this whole level here, taps into it once, twice, 3 times. This is inducing buyers. Now we're on the 1 hour time frame, guys. If I drag this over, look, this is over 20 hours of price action. You can only imagine how many people are entering buys here. We understand that. So therefore, we want to be buying below. Okay, remember the market has literally communicated to us that liquidity is below this low. We are not guessing, we are not predicting. We're waiting for the market to tell us this. And if you look to the left-hand side, what do we have? Another liquidity block here. Remove this. Drag it over. Another higher time frame liquidity block here. How can we take this entry? Just like this. Stop loss below the low to the left. Look at the same thing across all entries, guys. When liquidity is taken, stop covering liquidity block. Liquidity taken, stop below liquidity block, all the way up into this last entry here. And again, we are taking that entry once the liquidity is taken, and we are targeting the highs up here, just like this. This is all done from the higher time frames. Now imagine when the higher time frame is intact, you can actually find entries and hold them for like 1 to 10, 1 to 15, 1 to 20. So does this always happen? Of course not. But when it does, you want to be able to identify it and take advantage of it. So we've identified a form of liquidity. Okay, we're going to be taking an entry off of it. Look where our stop loss is, below the liquidity block. We get tagged in. Let's go back to the 4-hour time frame, and we can get that higher time frame perspective. And we move all the way back up to the upside and fulfill that higher time frame target. Check this out. Boom, just like that. Remember where we were at the very beginning of this video on the daily time frame, all the way down here. And we simply just use the higher time frame to find entries on the way back up. Remember, if you use all these concepts in the higher time frame, it's great because it provides you that direction. Then when you go into the lower time frames and apply refinements, that's when the RRs can drastically increase. With literally just using the 1 hour and the 4 hour, check this out. We have a 1 to 6, we have a 1 to 7, a 1 to 19 here, a 1 to 14, and a 1 to 3.6. Okay, this is literally just using the 4 hour and 1 hour, and I think maybe we had one refinement, maybe on the 15-minute, to find a smaller LB. Other than that, all higher time frame. Now imagine if you were able to refine those entries into the lower, the RR drastically goes up. All right, guys, if you enjoyed today's video, please leave a like and a comment down below. That was a long one, but it was a good one, okay? So please rewatch it if you need to. Let us know down in the comments what other videos you guys want to see from us. We'll talk soon.